Good morning, guys, or good evening, actually, for where you guys are. It's a good, yeah, just about a good morning for me. Good evening to where you guys are. Hope all is well with you guys, and we can see if we can untangle maybe the week ahead a little bit. So, questions are more than welcome. If you've got anything specific, then you can just ask. The process is to look at just some of the sort of things in the background of what could be moving the market, what kind of sentiment do the investors have, and then looking at the charts just to kind of see what might be flipping. So just starting with the sentiment. The fundamentals are kind of like going to be, yeah, well, this is the thing for me, Catherine. So the fundamentals are going to drive everything. That's really what I want to look for. I want to look for what kind of market condition do we have, and what kind of fundamentals suggest where we are. Whether the market conditions are in a trend, are they changing, and then we can start looking at certain drivers that might go along with that, and seasonal indicators that might go along with that. So firstly, let's just think about the sentiment and what drives sentiment. Now, the sentiment is going to be driven by expectation. The expectation that the central bank specifically, that's the kind of core of why people buy and sell currencies. It's when central banks have been doing very little, then different fundamentals kind of take over. But we are very much in a kind of all eyes on the central bank, and how the central bank will devalue or appreciate the value of their currency. And really what we've got is a different scenario right now, because inflation is getting further under control. It's not completely contained yet. And if we trust and believe the central bank that the target is 2% for just about every central bank, arbitrary or not, it's not really for us to judge, but that's what they have stated. It's a 2% target, and we can see that the inflation is getting towards that 2% target month on month on month. It's grinding a bit slower now, and the last bit's going to be a bit harder. But we've had anything from 10 to 15 consecutive rate rises, depending on which central bank you're kind of looking at. And they've all been aggressively trying to bring deflation back into play. So just, disinflation back into play. So just to explain, yeah, we'll get to that, James. It's a great question. So just to explain, firstly, the difference between disinflation and deflation. Disinflation is when prices are rising but a slower pace than previous. So, for example, CPI, which is the measurement of consumer price inflation, goes from 1 month goes from 6% rise. Next month is a 5% rise, then 4% rise. That's disinflation. Deflation is when you get actually negative growth in those numbers. So actually -6% or -5%, that's deflation. So what we're looking for is a disinflationary environment, and that's what the central banks are trying to achieve. So just to get to this question, interested to know the strength of the US dollar versus the Aussie, the Kiwi, separately the CAD and the Swissy direction. Well, let's really focus on the dollar to start with. And we can have a look at the charts, and then we will sort of discuss the potential background detail of what might be driving the dollar and where this is going to go. So firstly, let me just share my screen, and we will look at this. So let's firstly bring in the DXY, which is the dollar index, which I moved up here yesterday. Here we go. Now, this is the dollar index. Now, really what we want to be looking at is the longer term trend. Then we can kind of bring it down to the intermediate trend and the minor trend. So the longer term trend is going to be found on a monthly. This is the primary trend. And we can see that this is, it has been moving to the upside, but these last few months have really kind of trapped the dollar. And it's suggesting that at this stage, investors don't really know what to do. And if we think about why they don't really know what to do, and we think about what would drive what they would do, it's to do with the sentiment. Are the central bank finished raising interest rates, or is there another one to go, or maybe multiple to go? And this is where we get into the data and see what the data is kind of suggesting. The last point that was made by Jerome Powell, if we kind of think back to Jackson Hole was basically the statement of, we're not done. Then the next central bank meeting was, we're going to pause this time just to see kind of how things flush through the system, and then we're going to rely on the data. Now, the data between then and now has been a little bit mixed. We've seen some weakness in the jobs market, but we have seen some strength, particularly last week in some manufacturing data. So initially, it looked like the dollar was actually going to start to weaken, but now people are getting a bit nervous, and they're getting a bit nervous that the next meeting, which I believe is on the 21st of September, or in and around there. It's not next week, but it'd be the following week. Is that right? So it's the 10th, yeah, the 17th. So the following week, we're going to get the decision on the central bank. That would that's kind of leaving people kind of guessing, what's going to happen next. Now, if we think about that, then what we really want to be doing is thinking, if people are guessing that the central bank are going to be raising interest rates, then they want to get the best value possible. And the best value possible in this phase here is this area down here. Now, if people are thinking that they're not sure whether that the central bank is going to raise interest rates, and maybe they're going to be selling, then certainly this would look quite interesting to start with. It may not be the absolute point, but there's a point here, which would be a test of that low of that last bullish bar. It could be here, which is the low of this bearish bar, or it might well be right at the top. Now, when we're thinking about what's coming next week, it's unlikely for it to be all the way up here. So we can discard that one, but definitely here, and probably particularly here. Now, if we look at that on a short-term time frame, and really what I'm thinking about is the sentiment. What's the sentiment? The sentiment is, right now, it's a bit of a guess, but if I'm going to guess, I want to go in at the lower end of price rather than the higher end of price. So that suggests that those that have got in down here may take a little bit off the table just to kind of free up their trade so it's completely free. Those that believe that it's going to be a pause may start getting in on the bearish side here, may start sort of selling positions. So we're closer to a sell zone, therefore, than a buy zone. But the sell zone is this is 1, this is 2, and this would be my 3rd if I was kind of thinking about it. If I put lines across here, there's 1. There is 2, and there is 3. Now, this is going to drive the decision that we make with the Swissy, with the Aussie, the Kiwi, the pound, everything else. So we've got a move. Now, that move is relatively broad as well, because if we're thinking that 105 right the way up to 109, then we're looking at around about a 4%, 3 to 4% rise in the value of the dollar before maybe coming down. That's going to be a little bit too expensive for us to trade unless we can get our timing right. So let's go down to some shorter time frames and see what they're suggesting about the levels marked off. We'll put in the levels again, but just now on a weekly. Now there's 1, so we're very close to that one. There's 2, maybe there's probably 2 there, and there's 3 there. That was the low end. It's going to be sort of somewhere in this area. Now these are vague areas, of course. So and that's going to be, yeah, that's around about a 4 and a 3% gain to the upside. So looking at this, this is suggesting that there's the breakout zone there, which is untested. Now, as we go into this week, the first thing that I would suspect is that this would be a much more likely area for a sell zone. We've got a horizontal level across here. We've got a horizontal level here and one here as well. And we're very close to the top of that. So maybe a little bit of upside to start the week, but then maybe a little bit of a turnaround back into this zone, maybe back into this zone. So I would be much more interested in looking for selling opportunities in and around this area. This area possibly maybe a push to the upside first, because we don't you know, we don't know what's going to go on with the central bank. Now, seasonal data is not particularly supportive on a week by week basis of dollar longs. Actually, seasonal data is quite weak for the dollar this week, just this week. When we go into next week, it changes a little bit. You know, we sort of like go into the rest of the month, it changes a little bit, which makes our job a little bit trickier because the near term seasonal patterns are bearish, but the medium terms are a bit more tepid. They're not bullish, but they're a bit more tepid. I don't love just putting too much weight on the near term unless I have different conditions. The COT data saw a little bit of buying in the dollar over the last week, and I'll show you that, which is a little bit problematic, but it's still kind of showing that that there is some selling kind of going in maybe here. This is what we got with the COT data on the US dollar. You know, it's been selling off for quite some time. You know, as kind of price boosted up. This is ever since 2022. So around about June 2022, they had a little bit of a boost to the upside, but they have kind of like, this is indicative really of what we've seen over those when we looked at the month over month bars, and they're in this kind of range. This is where we are in this kind of range, and it's not breaking out. Now this is sort of suggesting that again there's a lack of conviction. Now a lack of conviction is not a bad thing if you are at a price extreme, because it suggests that we're in a range. And if you're at the top of the range, you want to sell the range. If you're in the bottom of the range, you want to buy the range. So that isn't a bad thing at all for us to see that, but considering where price is. So price at the top of the range, COT data a bit tepid, seasonal data a little bit bearish this week, but going into next month a bit tepid as well, which would suggest that there's no reason. What we're looking for is a buying case for the bulls. Well, there's no real buying case for the bulls at this particular level. Now, if we think about the fundamentals, and we're flipping around here a little bit, but it's just because I need to keep coming back to this price chart. And making a case for the price chart, but we can't really do that unless we see what the background stuff is alongside it. I don't want to kind of go all of the background stuff, then the price chart, because things can get kind of lost in the chain. So if we have a look at the fundamentals, what's going to drive the dollar this week? And if I put it onto one screen. Let's bring this here. And I will share this whole screen here now. And then we can look at the fundamentals alongside the chart. Right, so fundamentals this week. Now, some are going to be more important than others, of course. So if we have a look at what we got for the dollar, this won't have any particular bearing probably on the market. Stuff out of the UK. This obviously will drive the UK's case, the pound's case, but we'll come back to the pound in a minute. Here we go. Now this is big. You know, this is a huge number here on Wednesday. So on Wednesday, we're looking at CPI data. If that CPI data comes in weaker than 4.3% on year-on-year basis, and more importantly, on the month-on-month basis, coming in at 0, possibly, maybe coming in at 0.1, but under the 0.2% that it was last month. So seeing a slower rate of growth. Now, some deflation in the CPI month over month creates disinflation year-on-year. Because of the short term versus the long term, so it's to see some deflation here actually would be quite healthy for the bears case, but we do need to wait for that number before we know what's going on. So how do we trade it? Well, I work in kind of the kind of probability of where the money is. You know, everybody's going to be speculating no matter what they hope for here. They're not going to know what that CPI data is. You could do a whole track of fundamental analysis to lead you to where you think CPI data is going to be. But the truth is, if the major economists right across the globe get it wrong, which they regularly do, then how much of a chance have we really got to speculate on that number and be right 90% of the time? Probably quite slim. So it's going to be a flip of a coin, and they're going to give us a relatively close number to have to beat anyway. But if CPI goes from 4.7 to 4.3, that's okay. But if it goes anywhere near 4, that's going to start looking really healthy for the bears case. So before this number, I wouldn't anticipate buying, but I would be happy to see some selling. Now, the question is, can we get a setup before this number is released to enable us to stay in a trade and really hope that the data is in our favor? Well, right now, this is bullish. So it is suggesting that we're potentially traveling all the way back to these highs. If you look at this daily, through this resistance zone, this could create some resistance here, undoubtedly. So there's a potential price point here, but that's still above where we are. And then the ultimate price point at the top there. So a little bit of upside is fine, but what we're after really is an indication that we've got some sort of trend reversal at these particular levels. And we don't see it on the 4-hourly. You know, this would be the base at the minute for the 4-hourly. That would have to be broken and closed below before we could suggest that we should be selling the dollar. Maybe even along that trend line as well would be quite useful. So below this point here in a retest, that would be worth trying to get in. And you can see if you got in there and this was our high, then you've got an area for a stop and a target down there, which is around about a 4-to-1. So plenty of room for maneuverability and plenty of time for some patience. If there is no lower high before CPI data is released, we just got to let it go. And CPI will do its thing. You know, it'll either be higher or lower. What we are looking for, or what I'll be looking for, is a technical reason for us to get in on short the dollar, and it's not there yet on a weekly, monthly, 1 day, or 4-hourly. 4-hourly would be fine for me to try and enter that short. So that's the thing with the dollar. Now, when it comes down to the other sort of things, I spoke about the pound. The pound all of a sudden has started to look very bearish. Now, if the dollar is going to boost up a little bit, this wouldn't be a bad option to see a little bit more downside. If we look at the pound on a longer term basis, very difficult to kind of state that we're nearer a high or a low point at this particular point. But it does look like we're on the move to the downside. There might not be that much more to go, but it does look it does look like we're on the move to the downside. You look at this weekly. Well, the weekly's kind of broken through. So really, I'd be looking for a retest, probably, maybe it's happened, but definitely a retest here before looking for downside. I wouldn't be interested here, even though it may well just continue to collapse. So still looking for the technical picture that will give us a much better price point to get in. But I would be looking for weakness in the pound. Now, the reason for that is because I lost. Oh no, that's Sam. Sorry. The reason for that is because Mark Carney now. Sorry, Mark Carney. Governor Bailey is suggesting that we are nearer the higher end of interest rate rises. So this is the extreme sort of scenario that we've got going on right now. The extremities may be sort of like being reached, which suggests turnaround in many of these things. GDP from the UK could well be weak. I'm not sure whether that'll be an absolute driver, but it will go something towards potentially pushing the pound lower. The number that I'm really interested in is the average earnings, because this is an inflation number. If these numbers again are starting to weaken, then we could start to see the pound also come down. I would have thought we may well sell off before these numbers come into play. And if the numbers come out weak, if we buy up, it'd be better. It'd be better if we buy up Monday, then we can start looking for signs and signals on Tuesday for a reversal, and then we can start shorting the pound. Is it wise to short against the dollar? Not so sure about that. What would it be good to short against? Well, the CAD looks okay. So the pound CAD looks okay for some downside. The Swissy potentially could be another one of those that could be at a turning point. You know, if the environment is turning, the Swissy has seen a lot of buying. This is the pound Swiss coming down. So the Swissy's seen a lot of buying, and we're starting to hit this kind of lower band of the range. If we can think about the concepts that we discussed with the dollar, or I discussed earlier with the dollar, is it in a buy zone or sell zone? This is in a buy zone on the pound Swiss, and you could go right across the board and have a look at the Swissy, apart from against the dollar actually, but have a look at the Swissy versus the CAD. That's in a buy zone. You have a look at against the Kiwi. That's in a buy zone. You know, not a bad week last week either. So the possible pause of interest rates then starts to play into the growth currencies. So the Kiwi, the Aussie, it would take away from the protection currencies like the Swissy. So Kiwi Swiss long, that could be of interest. Dollar, you know, we'll kind of see what happens with that, but that's in a potential sell zone. The yen doesn't look like it's going to be too favorable if a pause is coming into play, promoting growth. But on the flip side of that, it might start bringing currencies towards the yen as well. So the yen's a bit of a 50-50, and it could be an interesting one if you're looking to short the pound. The yen might be something to look at purely because of value, not because the fundamentals necessarily are in alignment, but the value of it is very, very good. So before I continue, and just to make sure that everybody's not just completely baffled, what questions would you like to pose at this stage, or are there any comments you guys would like to make? Have I gone too fast? Can't find my chat box. No, let me just see if I can find my chat box. It's around here somewhere. There it is. Okay, cool. Oh, US stock market. Yeah, a bit too fast, Robert. Sorry. Right. Well, let's have a look at the UK stock market. Sorry, it's because I've got a very short period of time to kind of get through as much as I can. It's not your fault, Robert. It's just the nature of this particular podcast or Zoom call or whatever we're going to call it. The takeaway, Robert, is that I'm looking for downside in the dollar. No, it's not you, mate. It'll become clear as you watch more of these. But I'm looking for downside in the dollar if there is a 4-hour setup to the downside. So it's got to be a lower high. I'm looking for downside in the pound and potentially a bit of upside in the Kiwi and the CAD. Really, downside in the Swissy as well. That's the overall takeaway. Seasonal data is not hugely suggestive of anything particular. Definitely some downside in the dollar this week, but only for the week. So it's a bit of a tricky one. But I do think that we're in a buy zone for the likes of sell zone for anything against the for the sell zone for the Swissy, sell zone for the dollar. There's no sell zone yet for the pound, but if it just starts to go back up again, I'd be interested in selling. Looking at US stocks, S&P is in a seasonal a period of weakness, and we are seeing that that it's in a right on top of a horizontal level. This does suggest selling. It does suggest that we see some selling in the S&P. I think it probably will play out. I don't think we're going to collapse. You know, I don't think there's any reason for the US market to suggest that there's going to be a collapse, but I do think another ease back into an area that is currently untested. There's a bit of an inefficiency here when you consider that these are all green and there's been no kind of opportunity for the bulls to come back in. You know, anybody that misses run so far, they're kind of waiting, and so I think there's money here, but I don't think there's money here. So I'd be looking for a retracement in the S&P. I'll be looking for a retracement in the NASDAQ, huge one actually here, but I'll be looking for a retracement in the NASDAQ. I think the horizontal level here is pretty robust. I think that there is a chance for the seasonals to play out, which it does tend to be weak going into October. The fundamentals are a bit difficult, which is why I don't think we're going to get a collapse. But I do think just a bit of an ease to the downside would be my preference, Catherine. If I'm honest, I wouldn't want to short it. I would prefer. I'm a bit nervous about the short. I think it's going. I believe there is a short. I think there is a retracement in the Nasdaq and the S&P, but I think it's part of a bull run, which is making me a bit nervous about trying to get on board with it. I think that I'd prefer to see that short and then hop in on the long side, rather than play the short. But I do think the short is coming. So I guess it's take your pick on how you want to play that one. The euro dollar is a strange one again. That's in a buy zone if you consider this horizontal line here. But I think that there is possibly some maybe a little bit further for it to come down. You know, maybe this area here, and I'd be much more comfortable looking for longs here than I would be here. So I think this is going to be dependent on what happens to those numbers from the United States. I think that there is probably a long on the euro dollar. I'm not that keen on it. I think the fundamental data is a bit weak for Europe, and I think that the reason that this could see some upside is more to do with inflation than it is economic strength, and I don't particularly like that. I think that they've probably got a bit further to go in the central bank's got further to go in comparison to the Fed, which is why I think the euro dollar probably does accumulate in value in the medium term. But the economic picture is so worrying that I don't know whether they're going to have quite the ability to raise interest rates for that long. I think they'll do it, but I think that they'll probably do it and stop and and try and ease out of it as soon as they possibly can. So I think maybe a little bit of upside, but I'm a bit nervous about the strength of the euro. Retrace and pick up along. Yeah, I mean, I'd be looking for a retracement and pick up a long, but a pretty deep retracement. You know, I'd like it to come back down here on the Nasdaq. You know, I'd like about a 2,000 point drop on the Nasdaq. So looking at what would be 12%, maybe at least a 10% drop on the Nasdaq, which would leave us around this area. So this zone here I'd be comfortable with it. But I just don't know about selling into it. You know, I think if the dollar's to strengthen, if the dollar continues, if the United States continues to show high inflation, so that Wednesday number is going to be quite pivotal. If the Wednesday number is high, the Nasdaq's going to collapse. I would have thought for a period. If it's very, very high, it really will just plummet. And I think that's because the expectation of the Fed raising interest rates just ramp up exponentially, and if that's to happen, then the likes of the Nasdaq isn't going to do too well out of that. I think the AI story is starting to filter out a little bit and starting to get a bit quieter. There's problems for Apple in China, so some of the big players and the big hitters in the Nasdaq are going through some issues. Nvidia probably way overvalued. So that would also play into some Nasdaq shorting as well. So I think there is a short on for the Nasdaq, but maybe I'm not nervous about the short, but I'm nervous about the timing of the short. I think it is coming, but I don't know what's going to drive it. It might have to be Wednesday, that we're looking for it, Catherine. And if inflation data is weak, then there's not really any reason for the Nasdaq. Aside from what I've already mentioned, which is already known, there's not any major reason for the Nasdaq to collapse. So I wonder whether we might sell off into Wednesday, but then we need to see what happens Wednesday to see if this is going to have any follow through. So it's not the safest one for me. If I was thinking about the fundamental, the safest position to be in right now, it'd probably be shorting the pound. The technicals don't match yet. Oh, no worries, Catherine. You're welcome. Yeah, the timing's tough for the Swissy. It's been an absolute, it's a headache trying to short that Swissy, and the yen. You know, the yen very, very difficult. The only good thing about shorting the Swissy is you get positive swaps, so you can actually kind of get in a position and hold it, but you can't short the yen and have positive swaps. You know, they don't. When you guys look at your trading account, you'll see a column that said swaps, and those swaps are positive or negative. You either get paid overnight for holding positions or you get money deducted from your account. If you trade the yen long, you get money deducted from your account. If you trade the Swissy short, you tend to get money added. So it's a tricky one. Pound, dollar, and euro tends to move in tandem. Yeah, they do have correlation, no question. They do have correlation, and the Swissy as well, actually, Danny. So yeah, absolutely right. But maybe that's another reason I'm a bit concerned about the euro. Yeah, exactly, Kat. Bang on. Yeah, I think that's the only way to play the yen. The only way I've found playing the yen, trying to kind of hold on to yen positions for long periods when you are in negative. So let's say the trade just doesn't move for days on end. You're losing money just because you're of the swaps. So that's a tricky one. But yeah, absolutely right. I think if you're going to play the yen, starting with an intraday position is much better, and then seeing if you can get some profit, then you can decide to hold after it's already in profit. If we were thinking about the pound yen, think about this on a weekly. These bars are suggestive of some downside, and this puts this point into an obvious price point here. You look at it on a daily, and all it continues to do is hold. Now, can you get on a? It doesn't look too bad on the 4 hourly. Doesn't look too bad. I mean, it's within this range, which is the problem. If you get a lower high here with the pound yen, if this happens here, and then you get the kind of like, you know, the move back up again, then there's a short. And as long as it makes enough sense to kind of like get, yeah, at least a 2-to-1 out of it, then it'd be worth doing, and I'd look for that. As I say, the UK is going to be dependent, of course, on lots of factors, but the fundamental factors for the UK when we're looking at it, I think this is going to be the number of the week. It may spill over into Wednesday and GDP, but GDP is mainly known. Trade balance as well is going to be sort of like quite significant. Thursday there is nothing special, and Friday there is nothing special. So Wednesday, Thursday, it's going to be Tuesday, Wednesday, it's going to be about the pound. And what happens with the pound. And you know, and if we get a rally in the pound before that data, let's say it comes up to this point, that would be interesting. Looking for a short up there in pound yen, that would be interesting. I'd be okay with that. Or a break and retest. Yeah, I think there's going to be a few different ways that this could be played. All we're really looking for is value at the end. Where's the value? Because we don't know what the economic data is going to post. So if the economic data comes out and it is strong, then we're potentially going to lose that trade. If it comes out and is weak, then we're going to get our position running. So really, our job is to make sure that we buy low, sell high, you know, as close as we possibly can, with protection, with a stop if we're wrong. Now that would suggest to me this is selling high, and this is selling high if it breaks the downside first. You bring that in with a dollar, with a pound, pound dollar. This would be selling high. You know, testing this pattern here. This would be selling high, or here maybe, but it'd have to do some work to get back into there. But that would be selling high, and this would be, you know, down here would be sort of like closing the positions. I wouldn't be a buyer of the pound though. I'll be looking for some downside with the pound, but not at this particular price point. You know, when it comes down to it, every single strategy is the same. Ultimately, it doesn't matter how you get there; it's the same. Determine direction. well, I'm going to determine my direction with the pound, with COT data, seasonal data, and fundamentals, and that suggests to me go short. Then you're looking for a bounce area. Well, I wouldn't mind here, or I wouldn't mind up here. And then you're looking for the, you know, the signal that you need around that bounce area to get you in. So you know, this is nowhere near a bounce area right now. In fact, it's right the way between the two. So they're all the same. Actually, this doesn't look too bad, does it? Yeah, it might be quite shallow. The retracement might be quite shallow on that. Yeah, more shorting on the pound and the euro. Yeah, I don't see why not. When it comes down to the eurozone, what do we got? Economic sentiment, that could move it a bit. Don't think that's going to move it much. We got a rate decision next week as well on the 14th. Wow. Okay. Now this is going to be big. Rate decision on the 14th. So the rate decision is 4.25% predicted. Could they raise to 4.75? If they do, this euro is turning around fast. That's going to be an interesting number. I don't think they will. I think the economic numbers are not great. The inflation's just not getting curbed enough in the eurozone though. So that's a bit of a flip of a coin as well. So that also puts the euro, that suggests that the early part of the week, if you get retracements, are well worth taking on. You know, in the early part of the week. This one, sort of, if you're looking at short in the euro dollar, this one may well be worth taking on, but only when you get a retracement. At this point, it looks like a buying area, and it probably will buy into it as well, or if not, there. You know, it's all about timing. When does it get there? Does it get there before the data? Because if it does, speculators are going to think, here's some value. Because if it then goes in my favor, I've got a low side. If they if it comes down, if it doesn't sort of like get close to those levels before the data, you've got nothing to do. You know, so that's the way that I would think about my approach. Where are we before data? Is it worth a speculation that we get the data in our favor? Well, at price it is, you know, or if it's not at price, then it's not. Okay, so I will probably wrap it there, guys. Hopefully that's helped to kind of you know, think about the week. What I'm looking for, just to kind of reiterate, is short dollar after a bit of a bump to the upside. Short dollar before the economic data. I'm looking for short euro, maybe after the economic data, but I'm not really sure on that one. I'm looking for short pound as well. Short Swissy. Probably that puts the long in the Kiwi, and it probably puts a long in the CAD. But it might be that, and it maybe puts the long in the yen as well, actually. Great stuff, Danny. That's great. All right, guys, have a great week. I will see some of you tomorrow that come into the show on Trading Buddies, and we will check how we're doing sort of as the week progresses. You are welcome. You are welcome. Have a great week, guys. Stay safe and make sure, whatever you think, doesn't matter what you think, make sure you've got your protection in place. If you get your protection in place, then the market can do what it wants. It doesn't matter if we're wrong, but it does matter if we're wrong without taking out insurance. Big problem. So make sure that you've got your protection in place.